welcome. You have tuned into Market Fatafat on ET Now. I'm Shrishti Sharma. With me is Vinny Motiwala. And viewers, this is the show where in the next 1 hour, we're going to be telling you all the buzzing counters as of now, either on the back of the news flow or on the back of the technicals. But before that, let's mark the recovery in the benchmark indices, Vinny, because Nifty is comfortable in green and Bank Nifty is also trying to make a good comeback.
Absolutely comfortably in the green, and look at the recovery, right? From the day's lowest point, almost 0.7% of uptick from the day's lowest point, 22,300, comfortably above that mark. Trading in the positive side is the Nifty 50 up 0.2% in trade. And what is pulling up the markets? You know, when you have Reliance performing well with more than 2% of gains, you have SBI, L&T, they'll be reporting their numbers, but ahead of the numbers, we're seeing an uptick of 1% for L&T, Tata Motors, NTPC, all these stocks are seeing good gains of almost 1 to 2%, you know, pulling up the markets and supporting the Nifty 50 today. While the banking side, that continues to be a bit subdued. So let's pull up the Nifty Bank. We are seeing, large banks like HDFC, ICICI Bank still a bit under pressure. The banking also has made a recovery from the day's lowest point. Let's pull up the Nifty Small Cap. What is that doing? That also has seen a sharp uptick, was trading in the green already. Now it's up more than 1%, while the Nifty Mid Cap, what is that doing as well? That had also managed to come up a bit in the green side and now also holding on to very strong gains. Look at the recovery here in the Mid Cap as well, up almost 8/10 to 9/10%. So clearly today, Shrishti, right now, at least recovery seems like it's there. Will it hold on in the next couple of hours? That's key. But we've seen a strong performance in terms of recovery coming in for the Nifty 50 as well as the broader markets also.
Well, yes, Vinny, and actually the relief is India Wix, which is now finally in the red. So let's wait out and let's track that action as well. But with this, let's viewers move on and let's connect with our team of researchers as well as our technical expert for today, and let's start highlighting all the buzzing trades for you. First of all, would like to welcome Dhwani Patel on the technical side as well as on the research side. Snehi and Ankita are joining us. A very good afternoon to all three of you. So let's start highlighting the counters, and we are in the thick of earnings. So firstly, let's mark one of the candidates which is due for its earnings slated today, and that is TVS Motors. This time around, what we are seeing for the whole two-wheeler pack is that the volumes has been declined on a sequential basis, but double-digit volume growth is what we have seen on a YOY basis. So for all the two-wheeler companies, the key number that we will be watching out for will be the margins, and a flattish sort of a growth we are expecting for TVS Motors in terms of the margin figure, while a double-digit growth on the revenue as well as profit is what we are expecting. 8,000 crores is the expectation on the top line. Bottom line expected at around 528 crores, and 11.2% is the margin what we are expecting. While the stock is not moving that great, at least for today, it's almost silent, down almost 1% as of now, but we will be watching out for TVS Motors earnings due today, and margins are key to watch.
Margins are key to watch there, but let's move on and talk about earnings reported. We did have Godrej Consumers that reported their numbers, and we did have a lot of brokerage notes that came in because the con call that happened was yesterday. So we did have some highlights coming from that front as well. Overall, the numbers were surely in line, but we have these brokerage notes which are highlighting some of these key points where CLSA has hiked the target price for Godrej Consumers. 1,079 rupees is the new target price. Previous target price was 1,025 rupees. What CLSA is highlighting that, you know, the company said that they'll be focusing on a high single-digit volume growth in India with flattish margins. Indonesia also, they expect the volumes by sustaining the HI segment, rejuvenating the hair care as well as scaling up the hair color segment over there. And hopes are obviously been priced in terms of the execution that is still pending. So yes, that's interesting to watch out for. Investec 2 is hiked the target price to 1,431, marginal increase in terms of a target price from previous target price of 1,418 rupees. They're maintaining their buy rating for the stock, and they said that the company has managed to perform ahead of most of its peers, and they've guided a high single-digit volume growth. That is something in India that everyone is watching out for in terms of the profitability move going forward, and that is why Godrej Consumers in focus up 3% today as well.
All right, we're moving on then, and Dhwani, let's get you there with your first counter, that is Exide. We have already seen a phenomenal move in a stock like Exide, but do you believe that the stock is yet again getting ready for a good move?
Yes, absolutely. The kind of volumes that we have seen earlier in the uprise in this particular counter
We saw a flag pattern forming on a daily chart, and then now the consolidation is yet to be over in this one. The volume suggests and the participation is suggesting that the further upside rally would again start in this particular counter. So I recommend a buy over here on this one. From current levels, one can buy into it. Keep adding your position as we cross the 480 marks. Once we cross the 480 mark, we'll see a further sharp move coming in on this particular counter. The next target on this particular one on the higher side come at 550 initially. Once 550 crosses, we'll see the momentum continuing on the higher side. Stop loss for the entire trade has to be maintained on the lower side at 445 levels. Given 445 is holding, the stock is in a strong bullish trend.
Okay, surely keeping an eye out on those levels over there for Exide. But Ankita, Dr. Reddy's, this one is in focus. Why is that so? Numbers, brokerage note, what is it?
Well, yes, Vinny, both of them. In fact, the stock was down and out 5% in early trade today as brokerages were not impressed, even after the company reported a 36% year-on-year jump in the quarterly net profits. Well, the company said that the jump in year-on-year net profit was largely driven by the growth in global generics revenue in North America as well as the emerging markets. Now, DRL's revenue also increased 12% on a year-on-year basis to 7,083 crores. However, on a quarter-on-quarter basis, the net profits saw a decline of 5% and the revenue also dropped 2%. The EBITDA margin was down 290 basis points. Well, if you look at the brokerages, then JP Morgan has stated that Dr. Reddy's revenues were in line with the estimates. However, the margins were a miss. The US market was softer than expected, while the Indian market surprised positively. With limited visibility on the pipeline, the brokerage has maintained an underweight rating on the stock and cut the target price to 5,170 rupees per share. Motilal Oswal has also maintained its neutral rating with a target price of 6,258 rupees, and Kotak Institutional Equities has maintained a reduced rating on the stock with a target price of 5,935 rupees, as they believe that the stock is fairly priced. And Nuvama has recommended a reduced rating on the stock with a target price of 5,028 rupees per share. That's the word coming in on Dr. Reddy's.
All right, then that's about Dr. Reddy's. But one such stock that is seeing no stopping today, and that is REC. Snehi, the con call was due today. Tell us more. What were the commentaries coming in from REC?
Well, absolutely, Shrishti. So, just going back a little bit in time, last week the results came out, good set of numbers, and like you mentioned, the con call was held today in the morning. Some very good commentary coming in from the company in terms of growth and also in terms of what the RBI norms and the new circular mean for them. In terms of growth, they're targeting to double AUM to about $125 billion by 2030. They also target to achieve 4 times AUM to $25 billion by end of 2030 for their non-power portfolio. In terms of their growth strategy for 2030, they want 30% of their AUM to come from renewable energy portfolio, 15 to 20% from non-power portfolio, and 55% from coal-based capacities. Now, in terms of what they said in light of the RBI circular, they say that the RBI circular as of now is only a draft guideline, and the provisioning for the same, as mentioned in the circular, will be done via impairment reserves and not via profit. So this means that RBI circular will not impact the company's profit, book value, as well as net worth. The only impact will be seen on the Tier 1 capital, and the company's capital adequacy ratio is adequate to meet RBI's requirements. They say that 40% of the company's loans are supported by the state government guarantee, and RBI norms would not apply here as well, and 20% of the overall assets only will get impacted by the RBI norms. Having said that, there will be no increase in REC's lending rates. So very solid commentary coming in on the growth front and also on the impact of RBI circular. And on the back of all of this commentary, the stock is holding up pretty smartly as we speak.
Okay, let's move on to the next one, and we'll talk about Canara Bank first before we come to you, Dhwani. Canara Bank has reported its numbers. When you're seeing in terms of the NII, we're seeing a growth on the NII front of around 11%. Net interest income is seeing a good growth, 9,580. That's what the NII is standing at. PPOP, that's around a 2% uptick there in terms of that, while in terms of the profits, 19% uptick in profits. The asset quality of the company, GNPA seems like has improved marginally, NNPA almost flattish and remained the same. But yes, keeping an eye out on Canara Bank as of now, holding on to gains of 3.4% in trade after its numbers. Today it had been managing to hold on to good gains as well since the get-go. So yes, keeping an eye out on that.
Well, yes, Canara Bank in momentum, but with this, let's move on. And Dhwani, let's talk about Tata Motors. A good up move in Tata Motors as well. Once again, above that 1,000 rupees mark. Tell us more how you're looking at this breakout.
So 1000 is looking up at a psychological mark in Tata Motors. Technically on the charts, what I'm seeing on a daily structure over here is we are forming a rising wedge formation, and a breakout on the higher side will lead to further run up into this particular counter. Derivative data is in favor on the bullish side in this particular counter from the current levels. So buy is recommended. Keep a stop loss on the lower side at 980. Given 980 does not break, we are maintaining a bullish stance on this particular counter. The target on the higher side initially is of 1100.
Okay, keeping an eye out on 1100 for Tata Motors. But on that note, let's just slip into a very short break. Don't go anywhere. We'll be back with more stocks after the break.
Welcome back to Market Fatafat on ET now, and let's keep it going with all the buzzing counters. And one such counter that we will be watching out for is Hero MotoCorp. This counter is in focus, the earnings are due, and the key to watch here again will be the margins of the company. 14.1% is what we are expecting, because do remember that on a sequential basis there has been a decline of almost 5% in the overall volumes, while there has been a jump of 10% on a YOY basis. So the revenue is expected at 9,343 crores. The company did take some price hikes during the quarter gone by as well. So keeping that in view, a 21% jump in the EBITDA as well is what we are expecting. And the margins expected at 14.1%. Lastly, the profit figure at 1,026 crores. But the key to watch apart from the numbers will be how bullish is the management in terms of the rural demand recovery, as well as the growth outlook. So apart from the numbers, do watch out for commentary. As of now, the stock is holding itself in the green with a gains of over 1%.
Surely keeping an eye out on that. But let's move on and talk about Jubilant Foodwork. That is a stock that we're keeping an eye out on. MK has come out with a note maintaining a sell on a target price of 420 rupees per share. What they're saying is that there was a strong trends that they saw in the month of April. Confidence for the consumers was building up. There was optimism on the street. Delivery waiver, the 99 rupees meal, loyalty rewards. That is something that will drive the growth in terms of revival for Jubilant Foodwork going forward. Other than that, they're also saying that there is growth in pizza category that has been encouraging. Let's not forget, pizza category was not doing as well as the burger category for some time. And now, finally, we're seeing some positive sign over there is what MK highlighted, as well as overall, Domino's is doing better than Pizza Hut is what we can understand from MK's note. Other than that, faster expansion in the newer formats is a potential upside that they could see for the stock going forward. As of now, the stock is trading a bit subdued, down 0.7% in trade.
Alright then, that's about Jubilant Food. But moving on, and Emkay Finance is the counter that you are tracking. Dhwani, tell us more how the chart's looking like for this one.
In Emkay Finance, we had already seen that the stock had given phenomenal returns from the bottom of 150. We soared up high at 350 levels, post which we saw certain stagnation and coming in this particular counter. This is yet to continue over here. A short-term sell side trade can be initiated over here from current levels. So sell at current levels for a target on the lower side of 240, and the stop loss that one needs to maintain on the higher side over here is of 255.
Okay, let's move on. That's M&M Finance that we're keeping an eye out on. JSW Energy, that's the next stock that you've picked out for us, Ankita. What is the reason for this stock being in focus today?
Well, yes, JSW Energy is in focus today. In fact, the stock climbed 6% in morning and has completely given up those gains. As you can see, is now succumbed to selling pressure and is trading with cuts of more than 3.5% right now. And it is on the back of healthy set of March quarter results that the company has announced, and they also announced a final dividend of rupees 2 per share for FY23, and the stock also gained as the company board approved a raising of 10,000 crore rupees in one or more tranches. But let's look at the results also for the company. We did see a revenue uptick of 3.2% on a year-on-year basis. The net profit also rose 22%. The EBITDA also saw an uptick of good 56% on a year-on-year basis, and the margins also came in at 42% versus 27.9%, which is an uptick of 1,449 basis points on a year-on-year basis. Now, JSW Energy continues to focus on aggressive growth path with investments in new thermal and renewable assets as well as storage solutions. Couple of brokerages note that came out was by Jefferies. They're maintaining a buy and they've hiked the target price to 690 rupees per share. They feel that the profitability improvement for acquired portfolio is underway. The 20 gigawatts capacity target by FY30 estimate could be advanced, and they forecast a 33% EPS CAGR in FY24 to 27. And that's a bullish note coming in by Jefferies for JSW Energy, and that's the reason why the stock is in focus today.
All right, that's about JSW Energy, but another counter on the roll today is Surj Estates. Snehi, take us through what's happening here.
Well, Shrishti, not a very good set of numbers coming in from Surj Estate developers this time around. A rather poor set of numbers coming in. Let's take a look at what the numbers were and why the stock price is reacting so badly. Down more than 5.5% in trade. That's where we are at with Surj Estate. Revenue has come in at 100 crore rupees versus 106 crore this time last quarter. This is last quarter, so this is down 5.3% on a sequential basis. Net profit has come in at 19 crores versus 17 crore. An uptick of 17.5% sequentially, but this seems to be the only positive when it comes to these numbers, because on the other hand you have EBITDA that has come down sharply at 53 crores versus 70 crores, which is down 23% on a sequential basis, and EBITDA margins have also contracted rather sharply at 53% versus almost 66%, and that's also down more than 1000 bips on the QOQ basis. The company has gone ahead and announced a dividend of 1 rupee per share. So on the back of weak results coming in for quarter 4, the stock is under pressure today, down more than 5.5% as we speak. Your turn, Shri.
All right, that's about Surj Estates. But moving on, let's shift focus to what United Breweries is doing. This counter wasn't focused on the back of the earnings, though the earnings were actually not that great, Vinny, because the margins have actually disappointed for this particular counter, because the street was expecting margin close to around 6%, but 4.5% is what the company has reported. And other than that, the revenue was though better than the estimates, but the management commentary is also not that great, because management is saying that despite some inflationary softening as seen as in Q4, the volatility will continue in the times ahead, and that will continue to focus on the revenue management and the cost initiative to drive the margin accretion. So margins were at 6.7% versus the estimates of 8%. If we talk about the operationally numbers though were weak, and 3 p.m. is the con call of the company, so more details are awaited, but as of now the stock has recovered from the day's lowest point.
Surely we'll wait out for those con call highlights for UBL, but let's move on, talk about GAIL. We have a brokerage note that's come from UBS on GAIL. They're maintaining a buy. They've given a hike to the target price for GAIL, actually comfortably. 250 rupees is the new target price. Previously the target price was now 190 rupees. Now they believe the improving cycle and structural growth is something that would work out well for GAIL. Still some gas left in terms of the tank, and they've raised the earning and valuation for FY25, FY26 EPS by 7% and 10% respectively on improved outlook for the commodity business, and near-term hurdles for tariffs is what they're watching out for. 13% CAGR growth in terms of transmission EBITDA is what they're expecting over the next 3 years. So that's the word on GAIL. The stock is buzzing away, trading almost in the day's highest point, 4% uptick for the stock.
Almost at the day's highest point, but even Dhwani is tracking it on the technicals, and Dhwani, GAIL once again touching the 200 mark. Tell us more how you're looking at this one on charts.
Absolutely. GAIL, IGL, MGL, these are certain counters which are there on my radar. GAIL looks very promising over here on the technical front, especially as the bounce that we are seeing in today's session over here is actually at a point of polarity technically, where earlier there was a resistance and now it's acting as a support. From current levels, one can put a bet on GAIL on the buy side over here. The stop loss on the lower side has to be maintained around 193 to 195 levels. On the higher side over here, the derivative data also suggests that first we'll see over here a target of 210 to 212. Post 212, we'll see further run-up coming in, and the continuation will be there till 220 levels over here technical.
Okay, that's the word on GAIL. Keep an eye out on those levels there. But Ankita, PB Fintech, this stock is also in focus, and I believe it's on the back of its numbers.
Well, yes, PB Fintech is in focus today. In fact, the stock tumbled over 5%, despite the firm reporting profits for the second consecutive quarter. Good profits, for the second consecutive quarter. And in fact, those dips have been bought into. In fact, right now the stock is trading pretty flat. But let's look at the results then. PB Fintech, which managed to break even in the previous quarter, turned profitable on the bottom line, reporting a net profit of 60 crores as against a loss of 9 crore rupees in the year ago period. The company's consolidated revenue also increased 25% on a year-on-year basis to 1,089 crore rupees. Now, Citi has retained a buy on PB Fintech, saying that the firm's quarter 4 performance has captured sustained growth in the new business, and the brokerage has also raised the target price to 1,435 rupees per share, which is indicative of over 15% upside from the current levels. Morgan Stanley has also shared an equal weight call on PB Fintech and set the target price at 1,010 rupees per share. That's the word coming in on PB Fintech, but currently PB Fintech is trading absolutely flat in rate.
Yes, that's about PB Fintech. But with this, viewers, it's time to step into a very short break. Don't go anywhere. We'll be right back.
If you like this video, then like, share and subscribe to ET Now.